Welcome to Web3 Watchdogs, the podcast that takes a deep dive into the world of Web3 security, compliance, and risk. Join Michael Pearl as he interviews executives from across the Web3 industry to uncover the challenges and opportunities of this rapidly evolving space. Web3 Watchdogs is sponsored by Cyvers, your one-stop shop for Web3 security and threat mitigation. Cyvers harnesses the power of AI to eliminate hacks, scams, fraud, and compliance challenges in real time, and even before they happen. For more information, visit cyvers.ai. That's CYVERS.ai.
Hello, everyone, and welcome to the Web3 Watchdogs, the podcast that focuses on everything security, risk, compliance, fraud prevention, basically everything that has to do with safety and security in the Web3 space. And today we have a very interesting guest. We have Ajinkya Tulpule, who is the general manager of bitFlyer Europe. Ajinkya, welcome.
Thank you, Michael, for having me.
So, Ajinkya, thank you so much for being here. And please, let's start with a short introduction from your end. Tell us a little bit about yourself, about your background, your journey into the crypto space, and how eventually you end up in your current role at bitFlyer.
Sure, happy to. And Michael, thank you for having me on the show. I watch it with a lot of attention every time an episode comes out.
Thank you.
So my journey into crypto has been slightly unorthodox. I entered the space from the side of the regulation or the regulator. So I was working with the UK's Financial Account Authority in London for about three and a half years between 2014 and 2017. And during my time there, I was seconded to a project within the FCA called the Project Sandbox or Project Innovate. And within the sandbox regime, the whole idea was to allow disruptive tech firms or financial services firms with a brand new idea which did not fit in the traditional regulatory space to enter and offer their services to real customers in a very controlled, supervised environment. And that was the first time I got into contact with all things blockchain, all things DLT, all things AI, but in the financial services realm. And naturally, one of the key components of that was tokenization of assets, crypto assets, and also cryptocurrencies. Since 2015, 2016, when I got into this world, I never really lost touch. I changed a few roles, moved from London across to Luxembourg, where I am today. And 3 years ago, I joined bitFlyer Europe as the Chief Compliance Officer, and then moved up into executive management, and more recently, the board of directors.
Very interesting. So I'm curious, before we dive into talk about bitFlyer and about your experience there, I would love to hear about your experience from moving from working for a financial regulator, right? The FCA, one of the most prominent financial regulators in the world, to basically working in the industry that you regulated a couple of years ago. So how was your experience, crossing the chasm and being on the other side?
Yeah, that was that was a move I had to think about very carefully, as one can imagine. When you're within the regulator, you're thinking a particular way. You're thinking about customer protection. You're thinking about ensuring that markets work well. You're thinking about promoting competition in the market. But when you join a company, although some of those elements still remain, but a key focus is, of course, to be a commercially viable and successful enterprise. So in a sense, the way you think slightly shifts from a regulator's hat to a commercial enterprise or regulated hat. And that is to which is the best product that's going to help the company, that's going to help its customers achieve a better outcome. Now, although it sounds on the face of it sometimes as being perhaps two opposing interests, I don't view that as such. Personally, I view regulators and regulation as a partnership, as a strategic partner for sustained growth. If you're at odds with the law, or if you're at odds with the regulator, it doesn't work. So there will be times when maybe the regulation or the people writing the regulation, the people implementing the regulation may not have a perfect understanding about the product, about the nature of the business, about the nature of the ecosystem that's being built around it. And that's where people like me who've kind of lived on both sides of the chasm come into play. And we are the ones that help build a bridge between these two worlds. So, quite frankly, I see myself as being in the right place at the right time.
Yeah, for sure. And tell us a little bit about bitFlyer. Obviously, the name rings a bell, I guess, to most listeners, especially to the listeners of the show that are kind of more savvy. But still, we would love to hear about the activity of bitFlyer and specifically about bitFlyer Europe. When was the decision made to enter Europe? How are you coping with the current regulation with the introduction of MiCA and so on?
Sure. So, bitFlyer as a group is a Tokyo headquartered global company. It's a global exchange. It was incorporated in Japan in 2014. So last year, the group celebrated its 10th year anniversary. And currently, we are working towards an IPO. So the Tokyo entity will be listed on the Tokyo Stock Exchange in the coming months. So as you can see, it's made quite some progress over the last decade. And one of the core ethos of the group is compliance and to take regulation and regulators very seriously. So bitFlyer does not like to play fast and loose with the rules. We don't do business unless we know we're allowed to do business in that particular area, in that particular country, which means I sleep very peacefully at night. It may not be a lot of hours of sleep, but whatever I get is very peaceful. And I think that's one of the defining and if I may say even certain element that helps pull bitFlyer away from the crowd is its focus on compliance with the rules. And we are even involved in Japan and in Europe in helping to guide the development of the rules. So in Europe, the entity was set up in 2017 and it first received a license in Luxembourg in 2018, which was a payments institution license. Back then, there was no VASP. So we were the first in the world to have a licensed, a regulated entity on 3 continents, in Asia, in Europe, here in Luxembourg, and in the States, where we have a bit license from New York.
Very interesting.
Yeah. And that's honestly was one of the main attraction points for me to join bitFlyer as well, because I was looking for a crypto asset exchange which took all these rules seriously and was still interested in being a very customer oriented enterprise.
And can you share a little bit about the numbers in terms of how many users do you have worldwide and how many users you have in Europe?
I'm not sure I can share those numbers on the top of my head, but I can say that I believe we have now crossed roughly a trillion yen in assets under management
Got
globally.
it. Got it. And from a point of view of a crypto user, of a trader, you have so many exchanges, right? And all of them are competing for the attention. And of course, you have the big ones. You have, let's say, Binance and the top five, crypto.com, and you can argue which one is bigger. It depends on the ranking. But obviously, there's a bevy of different exchanges, and they all compete on the attention and on the funds of the crypto users. What kind of a unique feature, whether it's a trading feature or a security feature that you offer to your users to attract them and basically to help them remain as your clients in the future?
Yeah. So one of the key fundamental features, and I would say achievements of the group, is that it's never been hacked. So there has not been any loss of customer assets, customers' crypto assets ever in the last 10 odd years. And we are very proud about that. Now, another feature, of course, is in the Japanese setting, we have certain additional products, including derivative products for the Japanese customer base. In Europe, because of the multiple regulatory regimes between PI and MiFID and MiFID II, we haven't quite gotten to the point of launching such products on the European base, but we are looking to do that in the future. In the meantime, we are focused on making sure our customers' experience is smooth and that they're treated in the way that you should be treated. We are not looking to run an exchange where, slightly shades of gray come through the door. We want to keep it clean. We want to have the right people in the right places. So our focus is truly to make sure that we have customers that are interested in getting a good service, even if the full suite of maybe 3,000 crypto assets is not available on a platform, but they're looking for something reliable, something that they know this company is not going to get fined or sued for not having a license.
I understand. And a little while ago, a few months ago, news have surfaced with respect to stablecoins being delisted from European exchanges, right? After a basically an order from the regulator, and that is something that obviously we were watching very closely. And different exchanges coped with this in a different way. Some were more complacent and decided to delist and even to hedge against some future dangers, and others decided basically to fight this regulation because they understood that it's going to harm their volume of trading and their offering for their users. What is your philosophy on that?
Yeah, that's a very interesting question, and maybe if I might just add a bit of flavor to the regulatory story there. So as you know, Mika came into force in two parts. So part one was about stable coins, or as Mika calls it, the arts and the EMTs. And the stable coins part of Mika came into force end of June last year. So June 30, 2024. While the remaining parts, so for the crypto asset service providers, came into force at the end of the year, so 31st December, 1st January 2025. And as a result, from about mid last year, any VASP or DASP or any of those acronyms that were active in Europe at the time, if they were offering a stable coin, they were now subject to MiCA regulations, which meant the stable coin must have first received, well, the issuer must have first received an approval to issue a stable coin within the European Union. And it was because of that that most stable coins were then delisted while the approval processes were ongoing. Um, bitFlyer's positioning is not very different because, of course, we follow the rules of the land where we operate, and therefore we would not going to offer a stable coin in a country in a geography where that was no longer permitted. So, although we had a big launch plan for multiple crypto assets mid last year, we had to tweak it slightly to remove these stable coins from going through the launch. So yes, our business was also impacted. We did reach out to the issuers to check if they had any intentions or plans, or if they ever had any advanced discussions with local regulators to receive approval for the stable coins. But unfortunately, we didn't really receive any positive or confidence-inducing responses from anyone.
Yeah, I can imagine. And I guess that now, after passing the Genius Act, probably the issuers are more focused on setting up their shop in the US, and optimizing all their compliance for the US. And that's not the first priority that they have right now to do it in Europe.
Yes, I believe that'll definitely be the case. In a sense, the States is perhaps a larger single market than the European Union is at the moment, and has slightly fewer cultural based frictions than what we have in the European Union. For example, everyone in the States speaks English, and it starts there. While in European Union, of course, we've got multiple languages. So I think gearing for one system where you've got an easier access to a higher customer base might make more commercial sense. At the same time, I don't think Europe is going to be entirely ignored either. I think it's just a question of prioritization, and it would be simpler to comply with the US requirements because they're not as stringent as what we have in Europe. So my guess would be issuers would first hit the American market and then add the compliance layers to enter the European market. So I think it's a question of timing, and I'm sure we'll see that move in the EU as well.
Yeah, and speaking of which, I'm curious. So you mentioned that you have basically three continents and three different jurisdictions that you are regulated in. You have Japan, you have Europe, and then you have the US. Obviously, very, very different regulatory environments. I'm just curious to hear what are the main differences that you see when speaking to your colleagues in other continents and other jurisdictions in terms of the regulator's approach.
So from my time also with a European regulator in the past, there's a in Europe there's a fair bit of focus on ex ante regulation or ex ante in the sense that they are interested in avoiding a problem from happening in the first place. So they will have stricter prudential requirements, stricter reporting, more frequent reporting, more in-depth reporting, so that it serves as an early warning system for the regulators to identify and detect a problem before it arises. The state side, this is much simpler. However, if a problem does arise, they are significantly stricter on how they deal with you afterwards. I'm not sure which one's better at this point, but that's just what we've got. So you will find
Yeah,
US penalties
just
to
to
be
highlight here,
yeah.
sorry to interrupt you, just to highlight here that, one of the claims of the crypto industry in the US was that essentially the SEC and the other regulators are doing regulation by enforcement, right? That, you can act almost freely as much as you want, but then, all of a sudden the regulator is going to say, hey, you breached this and that regulation, and eventually you're going to get punished severely. So obviously the advantages of the European system is that the rules are quite clear. They might be very harsh, and you have to invest a lot of time and efforts into, remaining compliant. Versus the U.S., where you can presumably act freely, but then if you make a mistake, which you oftentimes don't even know that you're making the mistake, then you're going to be enforced to the fullest, so to speak.
I think that's absolutely true, and I think we've seen that under at least in the last few years when we had Gary Gensler, the head of the SEC. I've heard a few versions of the term you use, Michael. I have heard um, enforcement in regulation by enforcement. I've heard regulation by retribution, and there's a few other not so nice versions of it too. And that's quite right. I think that's kind of where the problem comes in, because as a qualified attorney, the first thing that I would like to see in any regulatory framework is clarity and certainty. So I kind of need to know what is it that I need to do. And if I don't know that, how can you hold me accountable? And this is also a principle, a legal principle that's quite embedded in the administrative law of the European Union and its administrative bodies. So when you're dealing with a regulator and they want to take you to task for an action you were supposed to take, but then if you could not find any guidance, any rule, any regulation or circular on that action, many a times you can successfully defend your claim and say, look, if you want to take me to task, you first have to tell me what it is I'm supposed to do and how. You can't just come later on and say, well, actually, 3 years ago, you made a mistake and you should have known better. It doesn't quite work like that. And if it doesn't work for banks, it doesn't work for the London Stock Exchange, why should it work differently for crypto exchanges?
Yeah, definitely, definitely. And just to take you back to what you mentioned beforehand about bitFlyer being basically perhaps the only ones that have not suffered any serious security incidents and zero hacks. I guess that you cannot really share, to an extent about your security architecture and so on. But perhaps do tell us a little bit about how you managed to get there. What makes you different in that sense? What kind of tools do you use? What kind of repercussions do you take in order to prevent yourself from being hacked?
You're quite right. I wouldn't be able to share the security architecture. I'm not sure I even know it in its entirety. It's on a need to know basis, and I don't think I need to know. But one thing that I can say about the multiple teams that keep us secure is that they are really the top of the line people from around the world. They know what they're doing. They're always 2 steps ahead. And security is one thing that is taken absolutely seriously in the group. So we do not like to have any loose ends. We do not like to have any room where someone can slip through and cause damage. So whatever we need to do to achieve that gets always top priority. We also review our security features and our policies and procedures very, very regularly. And finally, we have sort of an unwritten rule to learn from our competitors' mistakes. So every time we find somebody else has been hacked or they lost some data or they lost some customer assets, we analyze it internally to figure out what happened over there. Can that happen over here? And how can we already implement something so it doesn't happen here? So that's kind of, I guess that's as much as I can share.
Yeah, yeah. I guess you cannot obviously share about the structure, but I'm just curious to hear, when something happens like the Bybit hack, $1.5 billion stolen, or even the more recent ones, CoinDCX and so on. And unfortunately, there has been plenty of exchanges being hacked during the last year, right? So I mentioned CoinDCX, Bybit, WazirX, Indodex, you name it, right? We went through all of
Mhm.
them. What is the atmosphere inside bitFlyer once something like that happens? Is it something that you gather your security team to talk about what you can learn from that? Do you actually change any of your policies from that? I'm always curious to hear kind of behind the scenes of what's happening when something so crucial is going down.
Yeah, and honestly, all of the above. So, there are multiple teams that are pulled together, and then of course, in addition to changing policies, there's also trainings that are rolled out. So, at the end of the day, the error happens not so much with technology itself anymore, but with the humans operating that technology. So it's the people that need training on how to detect. It's a simple example of how to detect a phishing attempt, how to detect social engineering, how to avoid even inadvertently having an information security failure, or how to make sure you're constantly using whatever the security features the firm has in place and not try to bypass anything. There's a reason for it. And of course, there are escalation mechanisms in place, and those have to be working.
Yeah, I imagine so. So you mentioned the FCA, and obviously you being a member of that regulator, and the FCA during the last year, it kind of led the fight for consumer protection with its APP fraud rule, right? And essentially, the idea, just for the sake of the listeners that are not familiar, is that if you fell a victim to authorized fraud, more specifically pig butchering, investment fraud, and so on, essentially you can demand your funds back from, and then it becomes a little bit more complicated because presumably it's from the PSP or the financial institutions, but essentially quite a few exchanges are suffering from that right now. And I know for sure that exchanges are starting to lose funds or to invest a lot of resources in dispute resolution versus the regulator. What's your take on it now that you, as we said, crossed the chasm and you see it from the other side?
Yeah, so I think if you know the FCA, they've got three priorities or kind of three goals, which include making sure markets work well, promoting competition in the markets, and consumer protection. So consumer protection is one of the three key operating goals for the FCA. And as a result, where they find a situation where they believe the consumer is being harmed or can be harmed, they step in, and they can do this using a number of different powers. They can do it using a market study. They can do it using certain new rules, which could be, for example, as you mentioned, Michael, rules for consumers who've lost some funds, and there needs to be some kind of a repayment of those funds from the relevant financial institutions. But there becomes always a question, a big question in these discussions, even internally within the regulator, is who should be held accountable for a loss? Is it really always the FI, or is it some points in time the consumer's fault if he or she is not careful as to who they are dealing with? And I think this is where it can become very contentious between the industry and the regulator. Can't comment directly on the pig butchering because we were not involved in that, so I can't say how we would have felt. I can give you the general overview from the industry, and this isn't the first time there's been an opinion from the FCA. For example, in the past, there were rules issued for redressal mechanism, which is again a similar case, but it wasn't crypto, it was other financial products. And again, when it came to this particular type of insurance, I forget the name now, but they required banks who sold that type of insurance to start repaying the customers. And so you kind of see that as a pattern. So this isn't the first time. I think this is probably the first time that the FCA is not turning its attention to crypto players because now they fall within the ambit of the regulatory sphere.
Yeah. Yeah, I can imagine, but I think that the motivation behind this regulation is essentially the fact that exchanges cannot really ignore that problem anymore. And again, as you said, there is a dispute into who is liable
Mhm.
for that, right? Because there are more sides to it, and because essentially, when a person is being defrauded, oftentimes it's a person that never held crypto, so they go through a process of sending their funds from their bank to the bank of the exchange. On their way there, they're going through an on-ramp platform, and eventually they land at the exchange, and then they send the funds from the exchange to the perpetrator. So it's a very long journey, and there are quite a few
Yes.
milestones there, and all the parties here are kind of arguing who is to be liable, if any, right? But the thing is, eventually, what we see from our experience is that the exchanges, and I'm not naming names, I'm just saying in general, the exchanges are plagued with fraudulent activity, whether it's pig butchering or other types of fraudulent activity and scams and so on. And by the way, also with processing illicit funds that clearly derive from mixers and hacks, by the way, that we mentioned earlier. So that there's a whole dark economy that is going on, that the exchanges obviously are exposed to some extent. They see only the tip of the iceberg, but they cannot turn a blind eye to. And I think that the regulators understand that, and that's why the liability, in my humble opinion, will only grow as the time passes by.
Yeah, and so in a sense, I see where you're coming from, and I think in a sense you're quite right. This also connects to the conversation we just had, right, about ex ante versus ex post, and how the regulatory framework in Europe is about preventing a problem from happening rather than coming after you once it's happened. So there's all of these mechanisms are built in place for exactly that. Now, without naming names, but if we look at litigation, so if you look at cases that have gone to court where a customer, for example, either gave his or her username and password to somebody else who then stole the funds, or the customer withdrew deposited fiat and withdrew crypto, as in bought crypto and then withdrew crypto to somebody else's wallet. These are kind of usually you'll find as the most common areas of customer consumer fraud. If you look at the court cases around it, more often than not, so in a majority of cases, the courts have decided in favor of the crypto exchanges as not being liable for the fraud, where the crypto exchange, number one, has relevant licenses. So if you're engaged in a unlicensed activity, as an activity that requires a license, but you do so unauthorized, that's problematic. And so, firstly, if you have the license, and secondly, if you've done a sufficient amount of KYC on the customer. If you kind of tick these two boxes, you're generally in the slightly safer space. It's not a clear green light yet by itself. It's not a conditional green, but at least it puts you in a much better place to argue your case. And I think that's one of the key points which I believe the FCA may not be taking into account. I think they've gotten perhaps slightly used to finding firms responsible and liable for items that in a traditional legal mindset, that's not where the liability would fall. So I think that it perhaps needs a far more nuanced approach than what they're doing, which is a blanket approach and say, well, if this happens, it's too bad, guys. You should have known better that this customer is getting defrauded. Well, I don't think it quite works like that for credit card companies. It doesn't quite work like that for banks. Maybe up to a limit, but above that limit, it doesn't. I mean, the financial ombudsman in the UK or even under European Union laws gives you up to 100K. It's 100,000 euros, 100,000 pounds worth of protection in case the bank fails, in case something goes wrong. Beyond that, it's the customer's problem. So we need to kind of
Yeah.
start keeping things in perspective.
Yeah, I totally agree on that one. And by the way, PSD3 that is coming, how do you think that will change it? Because there have been a lot of discussions around that. I'm curious to hear your take.
PSD3, I think it's going to have an interesting impact because, first and foremost, there is a bit of a discussion as to whether a crypto exchange even needs a payment services license to operate an exchange. There is a school of thought that is convinced that it's needed. And then there are people or a good school of thought that says maybe it's not necessary because it's already included within the regulatory framework of MiCA, which is quite extensive. So this dual licensed mechanism, it's not 100% given as to its necessity. But let's assume that it does continue. In that case, PSD3 would have quite some impact, but may not have big impact on the ground. And the reason for that is MiCA is already requiring a significant amount of transparency with the regulators, transparency with the customers. It requires multiple reports, some of them in real time, depending on which licenses you secure, whether you're a broker dealer license, which is RTO, or execution of orders on behalf of a client, or you're more in the regulated markets license, which is the operating a trading platform. And then those post-trade transparency, pre-trade transparency rules are applicable. So when you combine all of that, PSD3 gets fairly relatively simpler to deal with. You do have one requirement in PSD at the moment, which you don't have in MiCA, which is the segregation of assets, of fiat assets, which belong to the customer.
Yeah.
This is applicable under PSD, but not under MiCA. But again, MiCA does to crypto what PSD does to fiat. And it does have a line that you need to maintain these assets separately, fiat, you need to keep them secure. And if I remember correctly, MiCA even says if you have a PSD2 license, that doesn't apply to you because you're already doing it. So it's kind of got this overlap. I think one area where PSD3 might have a slightly more important impact on the ecosystem is the requirement to provide an explanation if a bank refuses a customer, a payments institution customer, on reasons of risk, especially if it's coming into the fintech areas. So
Yeah.
crypto exchanges or other fintechs still have a really hard time finding a bank account within the European Union. We get one, we get two, but it's not as easy as any other company. So that could potentially ease out for everyone.
Yeah, the debanking is a very good point. That's a pain point that many exchanges and other crypto companies and crypto platforms are experiencing. And yeah, I can see how it can affect that. But as you said, it's yet to be seen. We don't really know what the outcome is going to be. We're ending the end of the show, but I really wanted to ask you one of the things that I see oftentimes right now with exchanges and with wallets is the introduction of different Gen AI features, right? Agents, chatbots, and so on. Obviously, this is the new hype, and I can imagine why, marketing wise, it's a very smart move. First of all, I wanted to ask if you have considered adding a feature of that sort. And if so, do you see it as a gimmick or as a real value for the user that can change the experience of how they interact with the exchange?
That is perhaps the trickiest question you've asked me today. I think AI
I left the
tools
best for the last.
clearly, yes. I think AI tools are in, it's unavoidable. We will all be using some AI tool in some place within the UX journey, UI UX journey. We will be using it somewhere within the onboarding flow, be it for scanning the IDs, be it for to have basic questions answered by a chatbot or any of those methods. My thinking is first and foremost, anyway, at least to the bitFlyer Europe entity, it's definitely a question of security comes first. It cannot become, in a sense, a passageway for antisocial elements to enter the systems. And I think that's kind of where the focus really should be before we even go down to the customers. And second, if it does pass that very high threshold, then the question becomes, okay, is this really going to be useful if we achieve all of this and make it pass our security standards? What benefit will this really bring? And maybe in some cases, it might ease the burden on the operations team, maybe simplify certain repeat, kind of FAQs, which although you can put an FAQ page out there, but most people won't read it.
Yeah.
So maybe there is some value, but I think it really needs to be balanced. So there's kind of the triangle of cost, security, and customer benefit that needs to be balanced out.
Yeah, I think the security element that you mentioned is very important, and I think that is something that is not taken into account too often right now, because even not security as we may think of it in terms of hacks, but even think about it if you have an X amount of users using your platform, and they are tricked to buy a certain token or to sell a certain token, that is definitely something that can affect en masse the prices on this platform and elsewhere. So yeah, I think it's definitely something that should be taken into account because obviously the keys to the trading platform are well guarded, right?
Mm.
So the exchanges will have to make sure that this is not just a backdoor to tricking the system through the agent.
That's actually a really good point, Michael. And if I can just take that maybe half a step forward, which is if a chatbot or an AI tool of whatever nature ends up giving financial advice or it can be construed as financial advice, that could be a pretty serious problem for the firm if they don't have the license to offer financial advice. And so, yeah, you're quite right. I hadn't thought about that point. That's a very important one.
Yeah, yeah. I think that those are the type of questions that we're gonna keep hearing as the agents are becoming more common and more commonly used within the trading platforms, which they are. But I imagine that
Mm.
the legal and the regulatory questions will arise from that. Ajinkya, thank you so much. Unfortunately, that is all the time that we have. Really fascinating, very interesting to hear what you are doing at bitFlyer Europe, and tons of luck. Thank you.
Thank you, Michael, and see you again.
Thank you.
Web3 Watchdogs is sponsored by Cybers, your one-stop shop for Web3 security and threat mitigation. Cybers harnesses the power of AI to eliminate hacks, scams, fraud, and compliance challenges in real time, and even before they happen. For more information, visit cybers.ai. That's CYVERS.ai.